From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 24th, 2016. In a moment, we'll be taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. But first, it's important for us to look at the news calendar before we begin today and recognize the fact that we are moving into a bank holiday weekend. Beginning today and into tomorrow and even into Monday, many countries will be observing bank holidays for the Easter weekend. The only real potentially significant data that comes out over the next couple days is out of the U.S. at 8:30 a.m. Eastern Time today and tomorrow. Other than that, over the next several days, again, bank holidays are in effect. We could see very limited or light movement across many currency pairs because of the lack of volume of traders in the market. Okay, let's take a look at this EURUSD, the euro versus the US dollar. We're starting here. Actually, I'm going to zoom all the way out to the weekly time frame because this is something we've been studying in the live trade room, and I think it's bears noting and it's important here. Take a look at the weekly time frame. Left-hand side of the chart, we're looking back to 2014, where we were in a significant downtrend. And then in the beginning of 2015, we're looking all the way back to January of 2015. We have seen this currency pair well within a range here. The red box at the bottom right-hand corner of my chart shows the range that this pair has been in since January of 2015. So I think that's very important as you begin looking at the euro dollar of where you might look for opportunities. The higher you are within that range, towards the top of that red box, becomes more likely that you're looking at resistance and potential reversal to go back down, because that's what's happened for over a year now for the euro dollar. Of course, the closer you are to the bottom becomes targets for sells or potential support and reversal to go back up again for the euro dollar. So we're in a range. It's important to note that here on the weekly time frame. Back down to the daily time frame, you can see that same red box and note the fact that over the past couple of weeks we have challenged the top of that red box and the top of the range a couple of times. We saw it back here into February, the mid part of February, we saw the challenge, the fall back down. And then over the past even week and a half or so, we've seen the market come very close to it here. Back on the 17th, came very close to it, and now has fallen off 1, 2, 3, 4, 5 days in a row, now falling back against that rise towards the top of the range. So with that fall and with the current momentum and sentiment that we're seeing here for this currency pair, I think it makes sense to begin looking for selling opportunities on rallies to resistance from the top of the range or breakouts under some niche support for a continuation of our current bearish move that we're seeing here for the euro dollar. Let's begin zooming it in here a little bit more. We can see a couple of areas that we want to make note of. Of course, if you follow this yellow shaded area back in time, we're looking about 112 or so. Follow it back in time, you see resistance. Far left-hand side of the chart, you see resistance here just before the last high. So we know that the yellow zone has historically been resistance. So this becomes our intraday resistance. For the day today, we'll look at resistance there, just like it was here and just like it was back here on the left-hand side. Support is now seen at the green zone. Well, yesterday and now today finding support there, but this area right here where the candle bodies found resistance between 111.55 and 111.75 is important to note as well. You see some resistance here and even some support back here on the left-hand side of the chart. So the green zone, very interesting, 111.55 to 75. So we'll put that as our intraday support here. So we see support here, resistance here. So if you're looking to go short on any currency pair, if you're looking to sell something, you want to sell on a rally to resistance, which we know now is the yellow shaded area up here, or a breakthrough support, which we know is the green zone. A breakdown underneath that green zone, we look for an opportunity for it to go short again, back down towards the purple shaded area, which sits down here towards the 11100 level. Anything underneath there, we might even look for further movement back down here into the 1.1 level and the challenge of the moving average that sits down here, where it has been kind of a median zone between the top and the bottom. Fibonacci from the low to the high, and from the previous high to the current low, and even a previous uptrend range over here on the far left, we can see overlapping here the green zone, the yellow zone, the purple zone, the blue zone. All of those zones actually have some Fibonacci overlapping with them. Take it down to the 4-hour time frame. Again, let's zoom out a little bit so you can see the Fibonacci levels there on the chart. You can see the green zone holding as support for the past couple of days. A breakdown of that green zone just like the yellow zone. Take a look here. It found support at the yellow zone, pushed underneath it, went to the green zone. So if it pushes underneath the green zone, there's a good chance we take a turn back down here towards 111 and into the purple shaded area. I don't want to jump the gun too quickly and say we got to sell it now, but a push back to resistance or break underneath that green zone gives us hope that it's going to continue that downward fall. If it doesn't, a push back above the yellow zone may be the clue that we're looking for a reversal once again and another challenge towards the top of our long-term range that we were just looking at on the weekly time frame. Let's take one more Fibonacci level while we're here. Let's take it from this low right here to the current resistance high. In doing that, we find the 618 Fibonacci retracement level of that short range right here in the green zone as well. So easily looking at an open and close, a breakout under that green zone as an opportunity to go short, targeting the purple shaded area or maybe even the blue shaded area. If it continues to pressure through the purple zone, of course, we would look for it even further back down here towards this blue shaded area down here. All in the direction of the current momentum that we're seeing. You could even put a little short trend line here and say this is our short-term intraday trend. Anything back above there changes this focus back to the upside for the euro dollar. But staying underneath there, look for selling rallies to resistance or breaks underneath support for the euro. Keeping in mind the bank holidays going through this long Easter weekend. The only real data is U.S. data. If it's negative for the U.S. dollar, if the data we have coming out in the next couple of days is negative for the U.S. dollar, we might see those bumps into resistance like the yellow or even the orange shaded area. If it's positive news, we'll likely see that break underneath the green zone and the continuation lower for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.